Today we're going to be talking about the four big financial statements and how they're interrelated. So they are the Statement of Comprehensive Income, the Statement of Financial Position, the Statement of Changes in Equity, and the Cash Flow Statement. I'm sure when you first heard of these you were like, so let's break them down a bit. First up, the Statement of Financial Position. Also known as the income statement, it reports the company's financial performance in terms of net profit or loss over a specified period. It is composed of the two following elements, revenue and expense. The net profit then goes to the statement of changes in equity to calculate retained earnings. With this important equation to keep in mind, let's look at an example. This standard income statement outlines the total revenues to be $37,436. We then minus the total expenses of $33,036 to get the net income of $3,300. Next up, the Statement of Financial Position. Also known as the balance sheet, it shows a company's assets such as cash, liabilities such as debts, and owner's equity such as retained earnings at a specific period of time. The balance in retained earnings comes from the statement of changes in equity, and the balance in cash should agree with the ending cash balance on the cash flow statement. With the important equation, liabilities plus owner's equity always equals total assets. So here, the total assets equals $27,261, and the total liabilities and stockholders' equity also equals the same. And remember, they always have to balance. Let's look at the statement of changes in equity. It shows the changes in a company's retained earnings over a specific period of time. The ending retained earnings then goes to the statement of financial position, with this important equation to keep in mind. So we simply follow the steps. 6,805 plus 3,300 minus 1,000 gives us our retained earnings. The cash flow statement. It shows a company's inflows and outflows of cash over a specific period of time under three specific activities categories. They are operating, investing, and financing activities. Therefore, giving this equation. By following the equation, we find that there was a net decrease during the year of 156. So we get the cash from the beginning of the year minus this net decrease to get the cash at the end of the year. So that's just a quick summary of the four main financial statements. And remember, try not to be like this in your final exam.